Well, good morning, everybody. So, sorry I've not been around. Personal stuff to deal with at the moment. Still dealing with it as well, so I might not be able to do the stream tonight. I'll try, but I can't guarantee anything really. So, this is the first time I've really had a chance to really look at the market. Well, I was having a look a bit last night, and things were looking a bit iffy. We've got the FOMC meeting today. They're going to decide what the interest rate's going to be, and I think the market appears to be telling us what it thinks is going to happen, and it would appear that there's going to be a cut. Normally, the market will price anything in, right? So I haven't listened to the Fed. I haven't, I've got the time to listen to the Fed, but somebody, or should I say, the market appears to be listening. And I suppose outside of just the market listening, the consolidation across the board for stocks has been a bit of a concern. I mean, the 4 hour looks relatively good now on the US 500, which is something, right? Which is something. I mean, I can't remember the last time I made a video. Probably was Saturday, maybe Sunday. But we were thinking about a pullback into the Golden Cross, which we haven't had actually yet. We only got close to it yesterday. Yesterday, and the 50 exponential is what's been tagged here. So with this move for the S&P, for crypto, for everything, it's gonna it should respond more with a rate cut. Normally, markets will move in advance of a rate cut, then dump on it, right? But I think when you zoom out and look at the nature of the market this time round, it might be the case that the Fed are going to stick their nose in and say, let's push this up further. Now, the the market, being the S&P, has this death cross here and another one here. This top of this range, this 5,760, has been one of our areas where we think, right, maybe we take profit, maybe we limit positions for everything, not just the S&P. I know none of us are really trading the S&P, but we use it as a barometer of health. So remember that when we get there, which is it's not that far from where we are right now, right? If you push here and beyond, it might tend to be overextended and have to pull back and close within this area. If we get closing above 5,755, if we see closes above there and then even better supports, actually you could probably target 6,000 on the S&P. But just as we've said, for the last few weeks, moving up from this area, once you start moving into the death crosses, start to be on your guard, really. Just get on the back foot. There's nothing wrong with that because you don't want to get really screwed. You certainly don't want to be buying anything around there unless it's obviously for the very, 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 very long term. And we're talking like crypto stuff. But, the Fed could change the game. It would appear that there's an appetite for the Fed to change the game. How does that transfer to Bitcoin? And obviously altcoins are a completely different set of circumstances. On the last stream we did, which is actually about a week ago now. And again, I want to do the streams. I do. I just got stuff that I've got to deal with at the moment. And I can't really justify promising to do a stream when I kind of need to do other stuff. That's it's just like family stuff. But where we are right now, we've had today's peak is a decent bounce, over the last 24 hours from a low of 93,400 all the way up to 97, which, even higher than actually 97,700. I didn't realize it got so high. But more or less did a double peak on this wick area. I actually really quite like the way it looks. We have the pump signal that was generated at 94. The pump signal generated at that level, you would really think about targeting the next major level of resistance. The 97 is a resistance, but I don't think it's major. I really don't think it's major. We do have some pretty clear bearish divergence on the RSI and the daily. So when we talk about targeting the next clear area of resistance, we're talking just above 100,000, 101, 102, those kind of areas, based on the pump signal, based on whatever takes place today with the FOMC shenanigans. Most altcoins will follow, as they always do, but the Bitcoin dominance is not very convincing. It's not very It's basically failing to break down. It refuses to break down. Now we're over the area that we've expected to see resistance from now. There's about between 63 to 64% dominance. We had a little bit of hidden bearish divergence on the daily. That's nothing. And I apologise for the state of this laptop. This is as good as it's going to get for me at the moment. Cooling off now on the money flow index while moving higher technically is bearish divergence in the making. Unconfirmed yet, but still, that's what it's doing. It's not enough to say it's definitely going to come down. You could probably draw like a rising wedge on here. It's so hard to say that this chart means anything, you know. And we've always spoken about this at least on the Patreon, where we're saying, look, you know, Bitcoin dominance, reflection of market cap, and you know, between altcoins to Bitcoin. And the money seems to just continuously go into Bitcoin because that's where the ETFs are. That's where Michael Saylor is swimming around in his Bitcoins. So a lot of that's not going to rotate, but there's plenty that can rotate if it wants to. But there's a great deal of it that won't be rotating at all. It's locked into spot ETFs, and it's in Michael Saylor's basement. So we're not really going to be seeing much of that ever again. But as for the billions that get traded on Binance, yeah, I mean, you know, just Binance alone, plus all the other millions of exchanges, there's plenty of Bitcoins that could be rotated if somebody decides that that's what they want to do. They just don't do it, that's all. They're just not doing it. Right, I'll leave it with you there. There's nothing much more to say. I think we're all waiting on what's going to happen today. I think it will be a rate cut. I think it will actually continue the pump. But remember, there's resistances on the S&P. Only $100 from where we are. Break that. You are targeting 6,000. And then from there, we just have to look for further weakness. And it's actually, I'll show you something interesting. The last time I've looked at this laptop, look at this. Binance, you know how you these icons freeze? 57,890. That would have been good, wouldn't it? That was an opportunity. There's opportunities every day. We just don't realise it. It's just one of those things, isn't it? Or get stuck into the immediate situation. Remember, I've still got a particular bias. I'm expecting a peak between now and September. Whether we extend that into another year's worth of bull, I don't know. I think a lot of that could. There's an argument for it. There's an argument that we're already in a bear market. Nobody has a bloody clue. Just got to take it one step at a time. Let's just reflect on the fact that Bitcoin is in the $90,000 zones, close to $100,000, and you want to call that a bear market? Fine. It doesn't look like one to me. All right, I'll leave it with you there. Thanks for watching. Hope you have a nice day. Take it easy.